Market opinion. Arvind Sanger, managing partner of Geosphere Capital Management, says that Trump's statements could mean emerging markets could stay range-bound till the president articulates his policies more clearly.
Trade part of it and the protectionist part of it. And that part could be quite disruptive and quite negative, not just for emerging markets, but for the US and for global growth. After the rhetoric is done, how aggressive is Trump going to be? Because that obviously would be negative for North American trade, but that would be an early indicator of how he views trade as an instrument of aggression in terms of his quote-unquote America First approach. So I think that all of that keeps, in my opinion, emerging markets and markets in general somewhat range-bound without anybody wanting to get too far ahead of themselves till they get a better idea. Let's be clear, if you get past President Trump and you look at what's going on in Brexit in Europe, and you look at some of the election rhetoric coming out of a number of countries that have elections this year, I think the era of growth in global free trade in an unfettered way is unfortunately behind us. So what we are going to see is much more restricted global trade with a lot of impediments to it. Britain is good, talking about a hard Brexit, there'll be some negative consequences. US is talking about under Trump actions. So, if you're an emerging market country which is highly trade dependent, you're clearly facing a world where you'll see meaningful slowdown.